I would now like to introduce today's speakers. Rohiteshwar Agarwal, Vice President, is a leader in Everest Group's global sourcing practice. In his role, Rohiteshwar is focused on engagements and initiatives with global companies that focus on GBS and shared service centers. Sakshi Garg, Vice President, leads multiple engagements with enterprise buyer clients in the areas of location optimization, GBS, shared services benchmarking, peer intelligence, and talent strategy. Michael Jansen, Chief Research Officer, guides the practice research agenda and architecture by leveraging his extensive experience to identify and unlock emerging trends. And with that, I'd like to turn things over to Michael.
Thank you, Peter, and welcome everybody. Welcome to 2022. And what we're going to do in this session is we're going to follow on what we did at the end of 2021, where we talked about your key issues, the things that you're most concerned about, those trends, those issues, those actions that you're planning to take in 2022. And what we're going to do is this is the first of several sessions where we're going to focus in on the actions that the GBS organizations are planning to take in 2022 to solve those challenges that were identified at the end of last year. And so with that, we're going to jump into a specific set of issues around the GBS, and then we're going to move to the actions that we're expecting here. And Sakshi, why don't you start out with the kind of the recap of 2021?
Sure, thanks, Michael, and hello, everyone. 2021 was a milestone year for GBS organizations as the model became more resilient, recognized, and renewed. Majority of enterprises report that GBS model went above and beyond in terms of service delivery and provided the much needed resilience to the enterprise. Along with the resilience came recognition. Recognition reflected in terms of improved NPS scores, higher stakeholder engagement, expansion of services delivered, and so on. With this, the GBS organizations are looking to approach 2022 with a renewed focus on value creation, digitalization, and customer centricity. Next slide, please. While the performance expectations from the GBS model are very high in 2022, and you will see in the subsequent slides, we talk about the 5 success driving actions that GBS organizations and GBS leaders can take to, perform on those expectations. The headcount growth is expected to be modest based on our recently completed key issue survey that Michael was referring to. However, this growth is still solid, coming on the heels of a high growth and high performance year. Next slide, please. If you look at the expectations in terms of salary changes or compensation changes, that for the GBS segment are significantly high. And we believe some of this is due to the ongoing talent shortage that we are witnessing in the multiple labor markets, and also is aided by high inflation rates we are seeing across various key geographies. In the next few slides, Michael will talk a little bit more about the talent shortage, the inflation trends that we are seeing.
Yeah, and before we go there, Sakshi, I wanted to also key in on the overall enterprise perspective here. Organizations are really focused in on growth. We don't have a slide loaded up to it, but the growth expectations for both headcount, when you can make that assumption for revenue, is expected to be the most optimistic that it's been in years. We're talking almost double what it has been even pre-pandemic in 2019, 2020. And 2021 looks like to be a kind of a rocket launch, if you will, in terms of growth. So with that, what we're seeing is the need to add talent across the board, not just in the GBS organizations, but talent across the landscape. Now, that's the optimistic note. On the pessimistic note, the talents, we're talking about talent shortages all over the place. And so as we kind of continue to hear these conversations, people said, oh, well, they're going to go away post-COVID. And the reality is that's not going to happen, okay? So while COVID caught up a lot of the headlines, one of the things that probably didn't make the headlines is the declining labor pyramids that we have, or the population pyramids that we have in both North America and Europe. And what we have on the chart right there is what we call a population pyramid. And you see there is the headcounts for both North America and Europe, along with in the dark blue, and then India in the light blue. And so you will see there that the new population that's coming on board for our new workers that are coming on board for North America and Europe is actually 2.4 million workers less than we've had in the previous 5 to 10 years. And that's going to be a real challenge. That means we hear headlines about shortages of truck drivers, we hear shortages of dock workers, we hear shortage of manufacturing, and we hear shortages about in our industry. And so what I'm here to tell you is COVID was a challenge and created other disruptions, but the real disruption that's going to be with us for years and years ahead is what we don't have on board is additional workforce coming on into working ages. Now, with having said that, the light blue there you'll see is India, and so that's probably the optimistic part of the equation here, and it's going to be a big play into this conversation. The population demographics are such that India will bring on 1.8 million additional folks into the workforce, working age during the next few years here. But even India is going to experience a real challenge 10 years hence. So we'll have more to this story over the course of 2022, but these are immovable facts, okay? You can't create new workers if they weren't born 20 years ago. And so I think that's going to be a real challenge for our organizations. And I want to point to that over and over and over again here. That's the fundamental challenge that we're going to be really facing. Now, if you move to the next slide, what you're going to see here is with that is a secondary impact of that is we've had a lot of stimulus in our government, a lot of money printing all over the world by central banks, fiscal deficit spending and stuff like that. That's resulting in not only the supply disruptions, creating inflation all over the world. And while we've traditionally kind of gotten used to on a global basis of inflation in the 1 to 3% range with pockets of higher inflation, we're now starting to see global inflation all over the world approach 4 to 7% in that 4 to 7% range. In fact, CPI just came out in the US here at 7% for December in the January reporting. So that's going to create an increase in our cost structures. We've been reporting on this in terms of the impact on salaries and vendor rates, but don't expect this to go away anytime soon. And Rohit, the other part of this equation here is going to be exchange rates, and we don't have any slide on that, but talk to us a little bit about what's going on in terms of exchange rates and how that influences the overall dynamics here.
That's an interesting one, Michael, because historically over the last several years, in fact, over the last couple of decades, what we have seen is there has been a constant depreciation in some of the currencies from offshore economies. And what that has done is that has allowed a lot of GBS organizations to cushion the impact of local inflation. And as a result, they have been able to kind of operate at the similar costs or offer the same rates to the parent organization in their home currency. However, if you look at the last couple of years, we have not seen the kind of depreciation trend that we saw. Let's say, take an example, a US dollar versus a Indian rupee. We have not seen that kind of depreciation. Similarly, in euro, we saw some depreciation, but kind of, there was a reverse trend as well. So it's not as stark as it used to be. As a result, some of the higher inflation than expected and lower benefit on the exchange rate, it's kind of creating a double whammy and adding onto the inflationary pressures and the cost hikes for the GBS organizations.
So that double whammy is something we're going to have to pay a close attention to, and the shortage of talent, those two things are going to be with us for quite some time, or at least the demographics will be for sure, and we'll have to keep our eye on the other one to see what that does there. But in the past, we've benefited from the dynamics of both in a positive direction, and now we're looking at a challenging environment going forward.
Of course, no doubt about that. And we'll see more of that as we go on to cover the top 5 actions. But if you look at the next slide, Michael, and we start kind of uncovering, before we get into the top 5 actions, Michael mentioned our key issues study for 2022. And based on responses from a lot of our attendees today and the broader market, the GBS organizations believe that going into this year, driving cost improvement, Michael, becomes one of the top areas of concern. This is the key priority, and a lot of reasons you just mentioned. Further, COVID is kind of, there are recurring waves. As a result, companies continue to kind of, do a bit of a to and fro on where they are on their hybrid working model strategy. As a result, trying to better integrate it in a better fashion. This is the second priority. This is a more of immediate priority for organizations. If you look at the third one, that's very interesting, and I believe one of the most important ones. You talked a lot about all the talent shortages and how that's a structural issue across the globe right now. So companies have realized that one thing is clear: you cannot find project-ready talent, or enough project-ready talent out there. So the trick is going to be reskilling and upskilling your existing workforce, and that's the third priority. The fourth I want to talk about is innovation. What a lot of things that happened during the last 2 years, companies put a lot of non-business as usual activities on the back burner because there was a survival instinct that kicked in. As a result, even though GBS organizations survived, not just that, as Sakshi was earlier talking about, they thrived during the last 2 years, but they are now starting to feel that is somewhere they have, kind of picked their, foot off the pedal on driving innovation. And that's again starting to come back as one of the top priorities in organization who are doing relatively better on the top three. So as we go on, we'll kind of talk about, so what are the implications which will help a lot of our attendees today to meet these priorities in the remaining part of this webinar.
Okay, so we talk about high expectations going into 2022, both at the enterprise and with GBS. We talked about some structural challenges that are going to be hitting us from both the left, right, and center. And so what we wanted to do is focus in on the next part of this webinar, focus on what can you do about it. I mean, we don't want to just sit here and cry and say, hey, it's going to be hard, it's going to be difficult. While we're optimistic about the business, we're going to be hit with all kinds of challenges. So let's move into the dialogue around supersizing your shifts to a hybrid, and what's the plan there to make that happen. And Rohit, why don't you just get us started here with the work from home. We talked a lot about work from home over the last 2 years. What's it going to look like going forward here?
No, we have, and trust me, when I started doing the first deep research on the broader implications of COVID on work from home, I never imagined we'll be talking about it for so long. But as we move on, I think the real conundrum today is that pre-pandemic, most of the organizations had figured out, how do you manage on-site teams and how do you do that in an excellent fashion. And most of the GBS organizations were doing that well. As we kind of moved into a remote delivery model during the pandemic, surprisingly, the industry adapted very quickly. And again, there was a resetting, the working styles, and people learned, how do you keep your neck up above the water and kind of manage everything during the pandemic. We are all in that mode. But the interesting and then the difficult part is, as we are looking to a post-COVID scenario, or as we're starting to imagine that, ignoring all the waves that keep on coming back, there is a real conundrum. How do you create uniform experience to your employees in a distributed workforce model when there's a mix of work from home and work from office? How do you ensure similar performance benchmarks? How do you ensure similar data security? How do you ensure all that integration that needs to happen? So the bigger worry of the companies is that how do they maintain consistent focus on all different aspects as they get into it. And our research shows that work from home is not going to be a smaller portion. About 70% of GBS employees are expecting to be in a hybrid delivery model on a long-term basis. So there is that big problem. And as you talked about some of the talent issues earlier, Michael, it is further complicating the problem in the short term, because there is such a shortage of talent, and it feels like employees are looking for an excuse to jump the ship. No organization wants to be perceived as anti-flexibility or anti-work from home. Otherwise, they risk losing a lot of their talent too quickly. So what can GBS leaders do to address this? Let's talk about some of this in terms of what are the top three categories of decisions that GBS leaders need to take. First, let's talk about from a leadership and governance model itself. Let's start right at the top. If we start talking about it, GBS organizations need to rethink, how do they manage teams? What is their governance philosophy? Because they are used to of one or the other style, but how do they manage it in the truly hybrid model? How do they ensure, employees are really getting similar opportunities, career trajectories? There is focus on things beyond BAU. You're missing all those corridor conversations and whatnot. So how do you keep driving emphasis on uh, areas beyond execution of the defined scope of work? That's become very important. And a couple of other things, how do you avoid bias? How do you preserve, your the social and the cultural fabric of the organization? These are all the questions that companies are asking us, and a lot of work, we are doing in that area. But that's looking at it from one side. If you start looking at the second part of the picture, we start looking at the operating model itself. So organizations who have operated from a designated office, for decades and centuries, they are taking a step back to think, what is the real purpose of the office? Why do we need our employees to come together? Are there specific events through the year? Are there specific parts during a engagement project? Or are there specific things outside of their regular work where we need people to come together? And then all of those, things will define what their strategy needs to be. There are major implications on, what real estate they are going to need. Many of the colleagues in the industry I talk to, they are really worried. They don't want to make a decision too fast, because it's easy to give up real estate, but it's very difficult to kind of, bring it back. And there are major investment decisions in there. Uh, and then a bunch of other things. I don't want to go through each and every line, but talking about how do we ensure employee safety in the office, but also safety, outside of the office. So a lot of that balancing these two models is going to be critical. And lastly, but very importantly, looking at it from your talent perspective, how do you truly integrate your individuals, each and every individual, into that new operating model? Whether it's about ensuring productivity, how do you measure their performance? How do you prevent mental isolation or social isolation? All of that is becoming super critical. I think as an analyst, I can go on and on about it, Michael. But why don't we take this opportunity to hear from one of a seasoned practitioner, and Shilpa Ahir, who heads the strategy for Novartis for all of their GBS model. Let's hear from her. What are they doing in terms of their future working model strategy?
The global pandemic accelerated our organizational need to explore new working models, and our associates expressed a strong desire for more flexibility in how, where, and when they work. We believe we have created a future working model that optimizes both personal and business performance. Our journey towards that model is what we call choice with responsibility. We updated the flexibility policy since July 2020. The policy shifts responsibility from manager proof to manager informed, empowering associates to choose how, where, and when they work within their country of employment. Now, choice with responsibility is how we work together. As we moved forward in our hybrid roles, we encouraged our leaders to build in time for how conversations. The purpose of these conversations are for teams to proactively reflect upon, adjust, and redesign how they're going to be working together so that they have maximum impact in terms of productivity and innovation, and as well as enhanced experiences of engagement and well-being going forward. We continue to listen and learn from our people and run a global pulse check-in to understand how a new approach is working and what matters most to our associates now and in the future.
All right, so choice with responsibility. I think that's an interesting positioning. I think it will help them think about the longer term, broader relationship in the employee experience. There's a number of questions here around the data and the context for presenting the data around GBS. Is it India or is it global? And this is truly global data. So we are looking at this from a wide view. There's a lot of questions on what about X location or Y location in Eastern Europe and other places in Asia and around the world. We're not going to specifically do a deep dive on that. I will tell you that I'm working with some of our other analyst team that along with Rohit and Sakshi on the location options as we have going forward here. One of the things that we've been thinking about is, as you look at those population pyramids, where do we actually have pyramids anymore? You saw the U.S. one was no longer a pyramid; it was declining. But there are locations around the world with substantial volumes and have increasing populations out for the next 20 years. And so we're looking deeply at those right now, and we'll be back in that context, or reach out to us and we can tell you what our latest thinking on those are. But hint, hint, I spent a lot of time over the holidays thinking about Africa. So learning about the geography and the options there. And certainly that's going to be a longer term solution that I know we're going to be talking about. Okay, so let's talk about the resetting expectations in terms of cost arbitrage. And Rohit, this is not just a singular focused on high-end digital talent. Obviously, that will be part of the equation, but it's spread to all phases of the talent pool. Rohit, you're on mute.
Hey, thanks, Michael. I was saying, yeah, it truly has. And this is, in fact, one of the difficult but very important conversation that GBS leaders need to focus on. Before we get into what's happening on the overall operating cost, let's look at some data. In 2021, we all talked about the inflationary pressures, but let's see what happened, because there was a lot of noise that it's all happening in IT and it's not really happening for every skill. That's true to a certain extent. But if you look at the data closely, on an average, we saw about a 10% plus hike in most of the skill categories for IT, ITES industry, and GBS industry was impacted by it. And it was not, surprisingly, if you look at it, it was not just the IT, but some of the techno-functional roles. For example, your tenured finance associates who also understand the technology platforms they are working on, and who may be very valuable in driving a lot of transformation or automation projects. There was literally, a lot of fire to find such talent. And GBS organizations felt pressures like they have not dealt with. They were losing talent to a lot of other non-GBS, competition, which they thought that they had outplayed by offering significantly higher salaries. But there was a wake-up call in there. And again, if you look at it, at all levels of seniority, at all types of skills, the inflationary pressure was very high. Again, this is a global data, so pressure was higher in some markets versus the other. But on an average, it was about 10% high. And as Sakshi mentioned earlier, this data point, is very discomforting in a manner, where we expect in 2022 as well, we expect a wage increase of 8.1%. Now, what does that do? If you move on to the next slide, we did a lot
before you go on to the next slide, that 8.1 may be optimistic at this point on the low side, based on the increasing inflationary expectations too. So, and the attrition rates rising, I suspect that 8.1 may be the low water expectation for 2022 if the trendings continue.
No, absolutely, Michael. In fact, on that, even towards the end of last year, and this is December 2021 data, by the way, when we kind of looked at expectations in the next year. So, but even in the last 30 days, the attrition pressures have not significantly eased out. Even when organizations are approaching their kind of performance review cycles, bonus rollout cycles, they are not seeing a dip in attrition or significant dip that they used to see. So yes, all that attrition means that inflationary pressures may continue. Let's see till when. But if you look at the analysis we have done, across, what does it really mean, on in terms of your operating cost? So on the next page, we looked at it and we compared, the pre-pandemic, the kind of, during pandemic, and in the post-pandemic scenario. So I think on the chart on the extreme left, the first bar, we kind of looked at, if we index the operating cost for a transactional, very rule-based back office process in India, let's say the overall cost is 100, During the pandemic, and apologies for a typo in the chart, but during the middle bar shows what was the cost during the pandemic, because the facilities were not getting utilized, and then there was no transportation cost, there was no utilities cost, or all of that was on the lower side. Companies were able to use all that savings to fund a lot of higher salaries they were paying, additional benefits they were rolling out, some of the technology investments they made. So all of that they were able to manage, and really, it did not disrupt their overall budget for the GBS organizations. But as we look at the impact of it in a post-pandemic scenario, and we made some assumptions that let's assume your workforce is working from office 60% of the time, it's still working from home 40% of the time, we realized that the cost of operations is going to increase. And this is a significant jump. This is not a 1 or 2% increase. What that means, and by the way, we did it for India. It's not only limited to India. It's kind of a global scenario. Of course, the impact may vary across locations and across functions, and it could be even higher for many of the other skills. What this means is that you are not going to be able to deliver the same level of arbitrage benefit that a lot of your clients, the parent organization, is used to, and it kind of starts raising questions. The good thing is that you're not alone. The service providers, who are kind of operating in similar markets, they are going through similar pressures themselves. But what do you do to address this issue? And we try to highlight the controllables and the two key categories of controllables. So first, decisions to be made on what is impacting operating costs the most. So one is the real estate decisions. I think they will be really critical. We talked about the purpose of office earlier, but deciding on the scale and the nature of real estate, that's one big controllable factor. And the second, like I said, organizations cannot sustain the practice of throwing more money to get more talent. I think that's simply where you draw the line. There were a lot of uncomfortable decisions made in the last year, counter offers, out of turn hikes, whatnot, right? Where does that stop? So improving your approach to talent management is going to be key, and then kind of not letting it be entirely about your compensation policy. That's one part. Looking at the second side, that's kind of how do you manage cost, but also how do you manage expectations. So I think the GBS leaders need to really work with their partners on the business side to kind of reset expectations because of the global inflation and trends, the talent deficit. They still need to look at the bigger picture of kind of what business needs and not worry too much about all the historic expectations. Also the nature of the work, going back to that where Sakshi started this entire conversation, the profile of the GBS organizations has expanded a lot. And as that has expanded, there are more complex services, there are more senior positions, there are more global roles that are moving into the GBS organizations. And as that happens, the expectations around arbitrage need to change because the primary value driver of a captive model is moving from cost to talent, and then it's the talent arbitrage or the talent is the differentiating factor, and that needs to reflect in the expectations. And lastly, how do we move away from the cost conversation and move on to the value or the impact conversation and how captives are creating an impact for the parent organization, because that is when there is a significant ROI, and then everybody will see the bigger picture. So those are some of the things, Michael, on the how do you manage the cost inflation.
All right, so let's talk about we actually started out the whole thing with the high satisfaction of the GBS, and in many organizations they were heroes of the last couple of years in terms of stepping up and providing the resources in certain cases when others could not because of COVID. But it goes beyond that. It's not just a step up into the conversation in the crisis, but it's also moving up into the CEO agenda and really tackling new aspects of what's possible for the GBS organization. So let's move into that, Sakshi, and talk about how the evolution continues.
Yeah, and as Rohit also mentioned, beyond cost arbitrage, GBS organizations need to focus on that value creation, which is really the essence of this action. We believe GBS organizations need to pivot themselves to support the CEO agenda. With the headwinds of the Omicron variant, continued pressure on supply chains, and labor shortage amid the Great Resignation, CEOs are looking for innovation, transformation, and operating resilience from every part of the business. And the GBS organizations have that opportunity to deliver along all the three areas. We have seen GBS organizations that focus on value creation are able to generate 2x impact for the enterprise compared to the ones that are only focusing on cost arbitrage or providing those savings because of labor arbitrage. The 2x impact is generated from the top line growth by increasing productivity, by enhancing customer experience, and also by embracing digital transformation. Now, how can GBS organizations achieve that? We'll talk about in the next slide. What we are seeing, next slide, please. Yeah. What we are seeing is that GBS organizations are creating multiple types of COEs or centers of excellence. And we have listed some of the prominent ones here, which could be related to core operations, IT, talent, automation, sourcing, and vendor management. These COEs are aimed at optimizing and innovating various aspects of people, process, and technology. And this could be within or outside the GBS mandate. And that's something important to underline, that the mandate is not just innovation within GBS, it could also be outside the GBS as well. So within core operations, we are seeing reporting, marketing COEs. We have, cybersecurity, blockchain COEs. Within technology, skilling, e-learning COEs. Within talent, innovation, RPA COE, and then, there are other examples. So mature and evolved GBS organizations who have built, a lot of credibility, who are multifunctional, who have a wider view of the organizations are typically able to deliver better on these COEs or are able to deliver better on the CEO agenda. In general, we are seeing 5 trigger points of when GBS organizations start to think about the COEs or are establishing COEs. Number one is cost pressure. So as we said, these COEs lead to innovation, which could lead to top line growth, which could lead to productivity improvement, and hence alleviate some of the cost pressure that GBS organizations may have. Sometimes the absence of innovation and capabilities on the parent side may lead to GBS organizations stepping up and delivering on that CEO agenda of, and building COEs. In many cases, we also see that GBS organizations have a very strong domain and technology or technical capabilities. Plus, they also are serving multiple geos, multiple business units, multiple stakeholder groups, and are able and have that global coverage within the organization, and that puts them in a great position to create some of these COEs. Leadership changes, can lead to the thinking around COEs, and also when at an enterprise level there is a need for business model transformation or digital transformation, we see GBS organizations stepping up or contributing in that digital transformation agenda by forming COEs. So those are some of the ways in which we are seeing GBS organizations deliver value, create value, and deliver on the CEO agenda, which is around innovation, transformation, and higher operating resilience.
Sakshi, you have down there the urgent need to transform the business model, and that has been the number one corporate level initiative that a CEO has been focused in on. That actually moved to number 3 this year, and talent supply really moved to number 1. So let's move on to the next conversation here, which is how are we going to solve this? We've been talking about raising rates. We're talking about shortages here, there, and everywhere in terms of talent. Rohit, give us your battle plan in terms of how you're going to make that work.
Yeah, and again, multi-pronged strategy is needed here. There's no single answer to it, and there's a lot of work organizations need to do. In fact, I would say they need to kind of continue doing what they started. But number one, how do you make the most out of your existing talent, right? We saw a lot of hunger to go out and find that project ready, absolutely brilliant talent that you can just plug in and solve all your problems. Didn't happen. So how do you improve, how do you contain attrition? A lot of things we talked about, your hybrid delivery, your focus on the quality of work. But from a talent sourcing perspective, how do you kind of internally move your talent around to identify which pockets of talent are easier to fill versus the others? That's one. L&D, we saw that earlier, it's going to be very, very important because you really need to make the most out of your existing talent. And then, how can you further, think about flexibility and productivity to kind of, you can't keep hiring more. So how do you get people to do more? And it's a lot of focus on productivity. That's one side of the story. Second is, how do you acquire, in a talent in a better manner? So everybody goes to campuses, but how's that becoming kind of do you have champions there? Are you attracting the best of the talent? Is that talent staying with you post 1 or 2 years once they become productive? So that's important. Companies need to think about new locations and new talent models. Gig model came into picture. A lot of contingent workforce is being deployed, and then a lot of companies are starting permanent remote model. Got to think about how do they tap into new talent pockets which are underutilized right now. And lastly, and this is where I see least kind of initiative being taken by the market right now, is how do you strengthen the partnerships to build better, to kind of bring better quality talent into the system. So everybody is looking at bringing more and more grads into the organization, but then there is a longer learning curve. Partnerships amongst companies operating in this industry to kind of create curriculums of what are their common needs and what can these students be trained on during their graduation, and then how do they work with academia to kind of implement that, because there is a big lag there. And if that can be solved, and there are some great examples of companies having done that, if that can be done, we have seen companies which implemented some of this were facing much lesser problems as compared to others. Again, let me bring in another practitioner. We have some great insights from Mathilde, who's heading the GBS for Cargill. And let's hear what they are doing on their overall EVP and talent strategy.
We are learning and looking to the future, and we are guided in this journey by our strong values and beliefs and the dedication of our colleagues. Looking forward, the real challenge out there is talent. We have done exceptionally well in all of our centers globally to be an employer of choice, to attract and retain the best talent that the industry can provide. And this is due to our values of putting people first and our absolute focus on employee safety. As we look into the future, here's what we are doing to anticipate as best we can the talent shortage. First, for Cargill and for our shared service organization, this pandemic was a call to speed up our ongoing journey of digitalization and automation. We were quick to deploy digital tools in record time, and now more than ever are embracing digital solutions. And while this was already part of our strategy, we believe we have tremendous opportunity ahead of us. Second, we continue putting people first by creating a safe environment for all of our colleagues and making their safety and well-being a top priority. And to support that, our future work model will have flexibility for all. Third, we have also been seen as a very strong ally for diversity, equity, and inclusion, either in what we are deploying to really help women reach a leadership role, or in our support to minorities. Our diversity, equity, and inclusion program reflects our values, and we are seeing great results across our centers. And finally, continuing to invest in our talent. We have focused immensely on capability building and upskilling, and we have invested time and money to ensure our employees have opportunities to grow and thrive at Cargill.
All right, that's great words there on the employee value proposition and improving the overall employee experience there. And so again, I think there's going to be no you're not going to stop hearing about this in the first quarter of 2022. This is something we're going to hear about a lot going forward here. I'm starting to notice actually in the real world, from a consumer perspective, companies are now starting to prioritize the employee experience over the customer experience. And previously, I've noticed, it's always been about the customer experience, improve the customer. But with a shortage of talent, the balance has actually maybe moved a little bit more toward the employee experience as being the number one priority to cope with the talent attrition rates and the cost structure and just the general unavailability of talent around the world. So, Sakshi, let's go into a little more detail about some of the things organizations can do to improve the employee experience.
Sure, Michael. And before I talk about why GBS leaders or GBS organizations in particular need to focus on employee experience, let's just discuss what is employee experience so we are all on the same page. When organizations focus on employee engagement and employee satisfaction, it leads to better employee experience. And when employee experience is enhanced, it leads to improved employee productivity, lower attrition, more innovation, and more importantly, better customer satisfaction. Now, why are we particularly talking about employee experience in context of GBS organizations? Let's talk about that on the next slide. We believe GBS organizations have dual opportunity and responsibility to drive employee experience. So first and foremost, GBS organizations must focus on enhancing experience for the GBS employees. GBS employees engage and interact with multiple functions, GOs, BUs, and both internal and external stakeholder groups. Hence, focusing on employee experience for the GBS employees will lead to or can lead to better experience for internal and external stakeholders, suppliers, and customers. So that's the first and foremost reason why it is important for GBS organizations to focus on employee experience. Now, secondly, there are multiple GBS organizations that offer hire to retire services. After finance, HR is the number 2 function that is being delivered by GBS organizations, and we are seeing more and more GBS organizations, joining this bandwagon, and they're expanding their services portfolio. So for the GBS organizations that offer hire to retire services or are operating HR shared services, they have the opportunity to improve experience of employees of the broader enterprise. They are interacting and engaging with employees of the overall enterprise by virtue of their hire to retire services. Hence, they will be in a unique position to drive improved customer experience at enterprise level. Thus, one of the key ways to become a customer-centric enterprise or a customer-centric GBS will be to become an employee-centric organization, because we, as we said, great EX results into great CX, and GBS organization can do that, can truly drive that. We have also seen cases where GBS organizations are becoming centers of excellence for employee experience initiatives, enterprise-wide. So, just summarizing, focus on EX is very important. It will eventually lead to better CX, and who doesn't want happier employees?
Okay, great, Sakshi and Rohit. These have been great insights here. Let's do a quick recap here, Rohit. So supersize your efforts. That's our action number 1 in the work from home. I think we're going to continue to be in this back and forth with on and off of COVID watch for a while, but you're going to supersize that.
Yeah, and number 2 is costs are increasing without a doubt. So organizations need to control what they can to manage the costs still, but also reset the expectations and focus not just on the cost of delivery, but also on the services portfolio and the value that they are delivering for the broader enterprise.
Okay. And also action number 3 here, capitalize on the good deeds done in 2021. Continue to focus in on the CEO agenda, moving up the value proposition as GBS organizations have been doing for quite some time. No stopping now.
And action number 4, I think the most important one, shortage of right talent poses a serious risk to all of this and the industry itself. So get your battle plans in shape as soon as possible. And it is important that you get into the execution mode right now, because things are changing very fast, and then this problem is not a short-term problem.
Yeah, and I think don't stick your head in the sand on this one. And the final one here, action 5, is obsess over that employee experience. You know what? It's a whole lot easier to retain an employee than go through an entire recruiting cycle. You're going to probably pay up anyway. So focus on keeping the existing talent happy, and actually making their lives easier. I mean, I think that's ultimately what everybody's looking for here, is how do we not just make it more fun, but also make them the job experience a whole lot better. So all right, so what we're going to do now is we're going to open this up to a quick poll here, and what we want to do is have you choose 2 of these top 5 actions here. What do you think are going to be the most important for you in 2022? So Kara, if you could open up the poll here, and just get your input back here, and just a quick rapid fire poll. Which of these are the most effective for you? You can see those on the quick poll screen, and we'll leave it open for another 7 seconds. 5, 4. All right, there is one. Well, it's consistent with what we might have guessed here. I'll leave it open. All right, let's give it a close here, and we'll showcase the results there. The two. Okay, so I guess no real surprise here. The 2 top answers are action 4 and 5, focusing on the supply chain talent, and the employee experience. That's what we're hearing loud and clear. There's nobody's disregarding the other 3. They're all ranked in the top. They're all getting serious consideration, but those employee experiences are going to be the number 1 and 2 for 2022. And I think there's no getting around that conversation that makes any sense. Okay, so we're going to also open up the opportunity for you to engage more deeply with Sakshi and Rohit and the team. And what we have is an offer here to dig into some of our research in a more detailed way, and interact with Sakshi and Rohit and team. If you're interested in any of the topics and you're an enterprise or GBS organization and you want to drill down in on any of these 7 different alternatives here, we have a lot of research and a lot of content and a lot of expertise. I think I've already alluded to you. We're looking at the location with renewed vigor. We're looking at new places around the world that are going to be well set up for not just next year and the year before, the year after, but also how do you set yourself up for 5-10 years down the road. Okay, and then let's open up to Q&A. We've got about 5 minutes here, and so we've got a bunch of questions here. Let me try to pick one on here.
So Michael, I can take up a question
Okay, sure.
that came up in one of the pre-webinar requests. So Rohit, actually this question is for you. What kind of penetration are we seeing in the insurance operations space? And what are the new workflows that insurance or broader financial services GBS organizations are adding to their portfolios? So I think it's a service expansion and penetration question in the BFSI space.
So Sakshi, overall, again, the exact penetration may vary across different types of work. But if I look at the core technology functions, or I look at the core operations or back office areas, we have seen on an average a good penetration of about 40 to 50% work moving to GBS organizations. Within the organizations which have a mature GBS model, there are few very large insurers who are very new or still, kind of in very nascent stages of their captive model. And in terms of the new types of work, so there are 2 answers to that. One, a lot of what was traditionally called middle office or even front office work, research, investment management, some of the client management tasks, they are increasingly moving, or companies are kind of piloting by moving them to the captive or GBS. And second, even in the traditional areas, there has been a significant step up and kind of reducing the handovers or letting the captive team own more of that value chain or that process chain. So there's a significant scope expansion. We have extensive research on that, which is available on our website, and we can share post the webinar as well.
All right, here's a question here. With the hybrid remote work model, are companies sourcing talent from outside of the GBS brick and mortar country? i.e. if the company has a location in India, are they staffing a remote employee from the Philippines? And then there's a part 2, but I'll let you answer that one first.
let me start on that, Michael. So right now we have seen some experiment with that, but no, given the long-term or the lack of clarity around the legal obligations on taxation, employment norms, companies are not very clear. Even if they may be sourcing talent from outside of the core GBS physical site, there is some or the other presence of that company through which they can route that employment. So that's pretty important. And the issue is not just at a country level, even within the country. For example, in a country like India, you need to fulfill a lot of local state-specific norms if you're hiring talent. So some of those complications are not very prominent right now because there are a lot of relaxations due to COVID. But yes, companies do have that in mind as they feel a little bit restricted or uncertain about their remote strategy in the long term.
Yeah, and the part B of that question was how complex are the HR tax issues around this type of arrangement? And you kind of hinted at the answer there.
Yeah,
Okay.
I think the intent is there, and we hear a lot of clients ask this, this kind of question. But the concept of a virtual GBS has not really taken off, or a virtually distributed GBS. Many companies are opening centers, and they may not be still working from a facility, and people may be in a remote manner. But can you create a virtual GBS where there are no boundaries of countries, etc.? That's something which has not really taken off due to all the HR, legal, tax related issues.
So actually, here's one for you. What's included in the 2 times enterprise impact with stage 4 GBS? Are these tangible or intangible benefits?
Yeah, so it includes both tangible and quantification of certain intangibles. So first and foremost, it includes cost arbitrage. So what is the cost saving due to shipping the work to a lower cost country in case it's applicable to that GBS organization? Then the productivity improvement, so efficiency and effectiveness improvement, and how do you sort of quantify that? And because normally what we see is people report, hey, if you would have done this work in US, this is what your cost would have been. Since you have done this work in India or Philippines and Poland, the cost reduction is X. What is not included is probably the productivity improvements, the efficiency, effectiveness improvements, any kind of top line impact, or cost avoidance or risk avoidance that the GBS organization contributed to. Through our methodology, we are able to quantify those and basically tell you that, hey, from a cost arbitrage perspective, the benefit may be X, but when you look at these broader set of values that you have created, the value that you have created may be 2x, 1.5x, 2.5x. So those are some of the key components of that 2x impact.
Let me get the question here around what do labor market pyramids look like in some of the other key GBS locations. So let me just give you the kind of the worldwide tour here. The US is looking, as we talked about there, and US and Europe are kind of similar in terms of 2.4 million less workers coming into working age. There are certain locations in Eastern Europe that are actually worse. We looked at Latin America, and they are stable, but not pyramids. But the number of workers coming into the workforce are roughly the same as they were before. India is going to look good for the next 10 years and look challenging. China looks pretty bad. And as I kind of alluded to earlier, the only pyramids left in the global big picture context is Africa. And those are true pyramids with increasing numbers of new workers coming into place. I want to give a scale conversation. I just remember looking at this yesterday, and the number of new babies. And we'll say 0 to 6 that came into Africa is almost 300 million. So just between 0 and 6 in the last 6 years, 300 million babies came onto Africa, whereas that's the entire population of the US. So it's not hard to imagine Africa being bigger in terms of total population than India and or China. Well, not and, but or China in the very, very near future. So we're certainly going to have to take a look at that. Go back a few generations, and that was not true. But it's definitely the tables have turned on that. So we're going to spend a lot of time looking at that. There are some real challenges there. I'm not saying that's the preferred destination yet, but I'm saying that's certainly it looks like kind of like India of 25 or 30 years ago from initial looks at it. So we're drilling down on that. The other part of that is the Forex challenges here, and I think it's implied there. Rohit, you talked a little bit about that, and the inflation that's implied with that too. I think those are, if we could figure out and knew what those predictions were, we could stop this job and go into currency trading. But any quick thoughts on that?
Not really, Michael. I think it's a fairly volatile market. But right now, looking at the, for example, I think the answer varies a lot by which two currencies are you comparing. But if I take the INR USD example, then we don't expect it to suddenly depreciate a lot. So some of that, but I'll not pretend to be an expert on that.
I think what we can agree on is it's not the one-way street it's been for the last couple of decades. I think we can agree on that.
Absolutely. We don't expect that to continue in the same fashion.
Yeah, so I think so. Again, these are just all changing dynamics that have an impact on the financial equation, and so I think the clear you can't, some of these things we're going to be able to have an impact on. Some of these things are structural in nature. We're going to all have to kind of keep our eye on the prize here, and don't assume that what was good for the last 10 years will be good for the next 10 years. So I think we all got to kind of focus on that. I want to leave us on an optimistic note. When I see those kind of report cards back on satisfaction, I think those are really good things. I think that the GBS organizations have continued to expand and grow and evolve and are part of the corporate equation going forward here. So I don't think they're going to go away. With that, there's a lot of things that you can find on our blogs and content, and certainly reach out to myself, Sakshi, or Rohit, and we can drill down on any of those, or some questions about deeper dives on any of those recommendations. Obviously, you can only do so much in a sound bite on a webinar. But speaking of webinars, we have a continuing series on the 5 success actions for each of our different stakeholders, including BPS, IT, focusing on pricing when we had that discussion this morning with the team, how to tackle the procurement challenges, and even impact sourcing and the ESG aspects of this. So we will be talking about that over the next couple of weeks, and encourage you to join us. And if there's anything else we can do for you, happy to reach out to us, and we'll be happy to respond. And with that, Sakshi and Rohit, I want to thank you for your time this morning.